are you acquiring agencies in India? What kind of agencies?
Well, we don't
advice
acquire.
you have to them?
We merge. So with Robbie, we said,
merge, sorry.
yeah,
Right.
with Robbie, we said, Gadino, and his team, we said, look, if you want to sell out, go and do an out with Dentsu or whatever.
So no payouts.
If you want to build a business with us, we'll half shares, half cash. We respect the fact that you're an entrepreneur, you've built a good business, you want to capitalize on it, perfectly legitimate, but we want you to take shares in the whole, right? So have an equity interest, in the whole company, and we're looking for people who want to buy in. I wouldn't even use the word selling anymore. I'd say buy into our philosophy, creating a new age, new era advertising and marketing services model and disrupt the old, which is what Robbie wanted to do. So we're looking for like-minded people in the areas of content, digital advertising content, in the areas of data and analytics, and in the areas of digital media. And in all those areas, India is really good. So there are good operations in India that would make sense. And I would say transparent operations, no hanky-panky. We want open book companies. So that's the background. Then there are 4 sort of criteria. One is we're looking for good records of top line growth. That's quintessentially important, that the top line growth should be strong. Strong.
How strong? How, like,
well, we've committed to doubling, or committed. We've had 3-year plans from 18 to 21, from 19 to 21, from 20 to 22, and now 21 to 23. And each of the 3-year plans, we said our aim is to double our size of our company organically, without deals, in 3 years, which means mathematically a 24% compound growth rate. So we're looking for companies that are growing, let's say 20% plus top line consistently, not just 1 year. And what's interesting, most of the companies we look at, they've done it in COVID year 2. I mean, they haven't been the COVID growth rates have been slower, but they haven't gone backwards, and they've grown. Just like we did last year. We didn't have a down month. April was our worst month, only up 3%. And we had steady incremental increases ever since April right into 2021 each month. So that's number one. Number 2 is margins. Our margins are EBITDA margins. That's EBITDA to net revenue, or gross profit, as the accountants call it. It's very confusing, but to net revenues of 20% plus. So we're about 22-23% at the operating level, and then central costs are about 1 or 2%. So we do just over 20% EBITDA margins. The third thing is that we're not an ad tech company or a martech company. We're a service company, and so we're only interested in companies that are part of the service layer. We don't want to be vulnerable to shifts in technology, because we benefit from shifts in technology because it moves the needle to one hardware provider as opposed to another, or software provider as opposed to another, or platform as opposed to another. So if TikTok, is restricted like it was and its competitors in India, then there are alternatives. And of course, we advise our clients on the shift in budgets to the other areas. So that's the third one. And then the fourth one is that management should have a significant shareholding. Some of the private equity companies have got into this space and other spaces, and what happens is the management gets squeezed out. We saw one very good company recently, which we really liked. One of the concerns we had was that management only had 5%, and we're looking for strong management ownership. So you're probably the best companies, the bootstrap companies that have not gone to the outside for money, i.e. the founders have kept them out, may have gone to the bank, or may have made limited equity deals. And those are the 4 criteria. So with the background being creating the new model.
And team size, is there like a sweet spot for team size? that you found?
Size? No. I mean, we're obviously, we want sort of decent size, but no limits on the top end.
Okay. So that's great. And they should just write to you directly if they find they fit all the criteria?
Martin at s4capital.com. I expect a torrent of emails.